Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're taking a close, educational look at an expert advisor called Mid-Body Reclaim Reversal. This is a pure price action strategy, which means there are no indicators at all, just the raw shape of the candles themselves. Over the next few minutes you'll learn how it spots a tired trend, how it reads a two-candle reversal pattern, and how it places its stop loss and take profit. Everything here is for education only, and remember, trading always involves risk. So what exactly does this expert advisor do? At its heart, Mid-Body Reclaim Reversal is a counter-trend reversal strategy. It belongs to a classic family of candlestick patterns known as the piercing line and the dark cloud cover. These are two candle patterns that often appear at the end of a trend leg, where one side of the market has been pushing hard and then suddenly loses control. The strategy was designed with pairs like Euro to US dollar and the gold market, XAU/USD, in mind, on the 15-minute and 1-hour timeframes, although it can run on any liquid symbol and timeframe you choose. What makes this approach interesting is that it uses no indicators whatsoever. There is no moving average, no oscillator, no smoothing of any kind. Every decision is based purely on the geometry of the candles and the recent swing highs and lows. The strategy waits for a market that has been running in one direction, then watches for a single candle that pushes to a fresh extreme before sharply reversing and closing back deep inside the previous candle's body. That reclaim, where the candle gives back more than half of the prior move in a single bar, is the fingerprint it searches for. This style of trading tends to appeal to traders who enjoy reading raw price action and who want to understand the reason behind every entry, rather than leaning on lagging indicators. It is patient by nature, holding back until a very specific combination of conditions all line up at once before it acts. And as always, please treat this as educational information only. It is not financial advice, and like any strategy, it will produce both winning and losing trades over time. Let's break down exactly how the strategy makes a decision. The expert advisor only checks its rules once per completed candle, and it will hold just one position at a time. It looks at two candles in particular, the most recently closed candle, which it calls the signal bar, and the candle just before it, which it calls the prior drive bar. For a long, or buy, setup, the strategy is looking for the end of a downward move. First, it confirms there really was a downward run into the prior bar by comparing closing prices several candles back. Second, that prior bar must be a strong bearish candle, with its body filling at least a set fraction of its full range, so a tiny, indecisive candle is filtered out. Third, the signal bar must dip to a fresh swing low, the lowest point of the recent look-back window, proving the move genuinely extended further. Fourth, that signal bar must trade below the prior candle's close, which on continuous data stands in for the price gap that the classic piercing pattern needs. Fifth, and most importantly, the signal bar must then close back above the midpoint of the prior candle's body, reclaiming more than half of it, but it must not close all the way past the prior open, because that would be a full engulfing pattern rather than a reclaim. Finally, the signal bar itself must close higher than it opened, confirming a strong bullish candle. When all of those conditions line up, the strategy signals a buy. The stop loss sits just below the lowest point of the pattern, with a small buffer added for breathing room. The take profit is then set at a fixed multiple of that stop distance. By default, that target is a reward of 2 times the risk. The short, or sell, setup is the exact mirror image. The strategy detects an upward run, a strong bullish prior bar, and a signal candle that pokes to a fresh swing high and then closes back down deep inside the prior body without fully engulfing it. The stop loss sits just above the highest point of the pattern, and the take profit again targets that same risk-to-reward multiple below the entry. Every single condition is raw candle geometry, with no indicators required at any step. Now let's look at the actual MetaQuotes language code that runs inside MetaTrader 5. At the top you can see the input parameters. These are the settings you can adjust in the strategy tester or on a live chart. Lots sets the fixed trade volume. Run bars controls how many candles back the strategy measures the directional run feeding the prior bar. Look back sets the length of the swing window used for the fresh extreme test, so a larger value demands a more significant new low or high. PenetrationFrac decides how deep into the prior body the close must reclaim. At 0.5 it needs to pass the midpoint, and pushing it higher demands a deeper reclaim. MinPriorBody sets how solid the prior candle must be as a fraction of its range. RiskReward sets the take-profit distance as a multiple of the stop, and BufferFrac adds a small cushion just past the stop level. Below the inputs is the core long logic. The code reads the prior bars open and close, the signal bars high, low, open, and close, and the lowest low of the window. The bull reclaim condition is simply a chain of comparisons joined together. The run was down, the prior bar was bearish, the signal made a fresh low, it dipped below the prior close, it closed at or above the reclaim target, it did not engulf, and it closed bullish. If every one of those is true, the entry is taken. The entry price reads the current ask. The stop loss takes the lower of the two pattern lows and subtracts the buffer. And the take profit adds the risk-reward multiple of the entry to stop distance on top of the entry. The short side mirrors this logic exactly. Let's walk through this illustration to see the strategy in action. The two lines tracking the candles are the recent swing low and swing high. These are the fresh extreme reference levels the strategy actually watches, since it uses no indicators at all. Follow the left side of the chart first. Price has been sliding lower in a clear downward run, printing a strong bearish candle. Then the next candle, our signal bar, dips below the swing low line to a fresh low. But watch what happens next. Instead of continuing down, it sharply reverses and closes back deep inside the previous candle's body, more than halfway up. That is the piercing line reclaim. The conditions are met, and a buy entry is placed, with the stop loss tucked just below that fresh low. From there, price turns higher candle by candle, climbing steadily until it reaches the take profit level, where the long trade is closed. Now follow the right side of the chart. Price has reversed and is now climbing in an upward run, printing a strong bullish candle. The next signal bar pokes above the swing high line to a fresh high, then sharply reverses and closes back down deep inside the prior body. That is the dark cloud cover reclaim, the mirror image of the first setup. A sell entry is placed, with the stop loss set just above that fresh high. Price then rolls over and falls, candle by candle, until it reaches the take profit below, closing the short. Notice how in both cases the strategy waited for price to extend to a genuine new extreme before fading the move. That patience is the whole idea. And of course, in real markets, not every signal plays out this cleanly. This is an illustration for educational purposes only. And that brings us to the end of our look at the mid-body reclaim reversal expert advisor. Today we covered what the strategy is, the piercing line and dark cloud cover patterns it's built on, how it reads the prior drive bar and the signal bar, how it walks through its code, and how it places its stop loss and take profit on both long and short setups. Remember, everything in this video is educational content only and is not financial advice, a recommendation, or a solicitation to trade. Every strategy carries risk, and losses are a normal part of trading. If you found this breakdown helpful, please give it a like, leave a comment with the strategy you'd like to see next, and subscribe so you don't miss future analyses. You can learn more over at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.